Inflation is once again on the rise across the eurozone.
New data shows consumer prices climbed higher in the final month of 2023. Prices rose 2.9% in December compared to 1 year earlier. That's an increase from November's year-on-year inflation spike of 2.4%. It was the first increase in the annual rate of inflation across the 20-country bloc since last April.
Joining us now is Ann Berry. She is the founder of Threadneedle Ventures. Ann, good to have you. So tell us, in comparison to the U.S. and our consumer prices, how are things going in Europe, particularly when we're looking at an increase of consumer prices in the last month?
Well, that very specific period of December 2022 in Europe was impacted by a policy measure that Europe had taken that the U.S. actually hadn't. So if you look back at 2022, a lot of European governments had helped consumers by putting in place support or subsidies for their energy purchases. Those went away in December. And so that is part of the reason you saw that pop for that month specifically. But a couple of other things are happening that are different from the US as well. Europe is going through a wage negotiation cycle right now. Remember, a larger proportion of the European workforce is unionized. And a lot of those wage negotiations aren't going to be done until the end of Q1. So there's still a little bit of wait and see to see what happens when it comes to wage pressure and how that contributes to consumer inflationary levels.
Will December's inflation data impact the European Central Bank's timing on when to begin slashing interest rates?
I think it definitely will. And actually, if you look at what the ECB prediction has been, it's that there's going to be around 2.5% to 3% core inflation through the end of 2024, which is still really significantly above that 2% target. Rather like the US, the European markets looked as though it had been factoring in up to 6 rate cuts for this year. The US markets also seem to have been doing that. I think that's now changed. And so I think the expectation has now dropped to 3 or 4 rate cuts while that inflation in Europe does remain higher than expected right now.
So, Ann, if inflation continues to rise in the EU, how might that affect the U.S. economy?
Well, there are a couple of different ways it could do that. And let's start, first of all, with what's going on the demand side. Inflation in the eurozone does seem to have been correlated with a slowdown in production. And if you look at the output for GDP in Q4 of last year, it does look as though the eurozone went into a mild recession. The eurozone is a big export market for the US. No US company wants to see one of its export partners seeing a decline in demand. So we've got to look out to make sure that this isn't a signal of global slowing down for key US export markets. That's number one. Number two, which is pretty key, is what are the relative levels of interest rates between the eurozone and the US? And if the US interest rates remain higher than those in the eurozone for a sustained period of time, that's where you get the risk of having an artificially strong US dollar, which makes it tougher for US companies to export, though a little bit cheaper for them to import. So those trade dynamics are an important function of inflation and the interest rate decisions that come from that.
All right, we will continue to watch it. Ann Berry. Ann, thank you so much.
Thanks for having me.